Hey, this is David Miller with the Miller Group of Keller Williams Realty, and the new real estate stats just came out for Orlando, and I wanted to interpret that data for you. So the first thing up is that the sales are up 7% compared to this time last year. That's outstanding. And if you break it out by type of homes, single family is up by 7%, condos are up by 4%, and townhomes are up by 5%. So why are sales up? Well, a couple reasons. Number one, we are during the summer season when the kids are out of school. So remember, this is data going through July, and this is when people with kids like to move. So because of that, there's typically more buyers out there looking. Number two, and probably the main reason, is the interest rates dropped again. The average interest rate in July for everything that closed was 3.85%. Now, compared to this time last year, it was 4.59%. So that's a huge drop, almost 1%. And the last time it was this low was September of 2017. So as you know, the lower the interest rate, the more you can afford, and that means you can buy more house. So because of that, people are jumping off the fence and they're getting in to buy a house, and that's an increase in the sales. The other part is that there's actually more homes on the market, especially single-family homes, than there was this time last year. There's actually 4% more. So inventory is still relatively low, but within that area, there's more homes, and families are buying single-family homes more so than condos and townhomes, so you would expect that to happen this time of year. Now, if we take a look at pricing, we're still appreciating at around 5%. So that's good news. Remember, for 5 years, we appreciated about 10, 11, 12% per month, and we could not continue to do that, because if we did, we would outprice the market, the buyers would stop buying, the inventory would go up, we'd go from a seller's market to a buyer's market. However, since it's slowed down and we're at around 5%, which is still very good, it's keeping the pricing in line with what the wages are going up as well. Now, if we take a look at the inventory, this still depends on what price range we're looking at. Below $300,000, there's only 2 months of supply. Okay, remember, anything below 6 months of supply is considered a seller's market. So 2 months of supply, below 300,000, that's a very strong seller's market. That means there's a lot more buyers than there are sellers. However, when we go above $900,000 for a house, there's actually 9 months of supply. That means that we're actually in a buyer's market. And when we go above 1.1 million, it's even more. So most folks are in the lower range. Obviously, there's more people that can afford a house below 300,000. And because of that, and because the builders aren't building those type of houses as much as they used to, that inventory is still relatively low. All right? So that's the update. If we can be of any help on helping you sell your property in this great market, or help you find a property in this limited inventory market, please give us a call. We'd be glad to help you out. Have a great day. Thanks.